Hi, this is Zak Mir with the US Chartbreakers here at Zak's Traders Cafe for Thursday, the 25th of April. Starting off with the S&P, and here we're in a much better place at the moment than we were just for the last couple of weeks. Nice rebound there, basically bouncing off the gap from February towards 48.60 and heading towards the 50-day line, 51.20. There's also a line of resistance there from last month in that area, so we need to break that to get us back on track for the uptrend within that rising trend channel from October and a potential move to 5,400, etc. by the end of next month or going into June. On the downside, even if we do break down and break the floor of that channel there, currently around 50.10, then not expecting anything lower really than the 49.20-30 area, which was the initial February support. On to the Nasdaq, and here you can see that we have bounced back above the old February support there, around 17,300. Above that, looking for the 50-day line around 17,900, and basically that is the line in the sand in terms of just having a decent rebound, or actually continuing the build that we've had since October and heading up to 19,000 by the end of next month. On the downside, obviously the old gap there from back in January, 16,700 could be a target if we do snap the recent rebound tendency. Moving along to the stocks and starting off with Amosite, where you can see that we hit the initial rising trend channel target there from the end of August last year, around $3.75. We need to see that level recover to give us a new leg to the upside as high as $5.20 by the end of next month. But obviously at the moment, looks like the shares are going to try and regroup. Ideally, we stay on the right side of the late January, early February resistance around $2.75 on the latest retracement. Next stock is one that I don't think we've looked at before, B. Riley, but here we are looking at it now, and here the shares breaking that resistance line there from back in November. That's around $26 above that. Potential for $48 over the next couple of months. Maybe the initial target there, if you're thinking that's a bit too punchy, would be $35, which was the late October, early November support and then resistance. But the key here, staying above that $26 line there from the end of last year. Next up is Branch Out Food, and here jumping from the low end of the range up to the 50-day line, $1.95. Ideally, we stay above the old resistance line there from back in February, $1.65, let's call it, for a retest of $3 plus by the end of next month as a best case scenario. Next situation is Cidara Therapeutics, and here bear trap so far below the old support there from February and March. So the old support there around $12.60. Looking for an end of day close back above that to give us an initial target there at $15 plus, and the 50-day line by the end of next month. Nice RSI rebound off the oversold 30 level. So we are on alert for a potential recovery of the old support area there. We're looking at the next stock almost every day here now, which is normally a good thing, Cazoo, and here you can see that after a bit of a wobble that we had after that double top from earlier in the month, shares are gaining ground again. We had a resistance line there from basically from back in January around the $10 mark. That's been cleared, and above that, looking for a retest of $17, $18, perhaps up to $20 by the end of next month. The way that we've got a higher low for the second part of April and the 50-day line rising well suggests that maybe the bulls will be pleasantly surprised. Another potential recovery area, recovery stock rather, coming in the form of Cyclacel Pharmaceuticals, and here you can see that not a million miles off the latest formation at Cazoo, but pushing through the 50-day moving average, $2.30 above that. Looking up to the top of that broadening triangle from back in December as high as $3.25 by the end of next month. And obviously it's been a bear trap rebound from below the late March support there around the $1.85 level. And we'd like to see that remain intact. Another stock which has been appearing here quite recently is Tech, and here you can see that broadening triangle stretching out towards $4.50, which we're looking for by the end of next month. Ideally, we stay on the right side of the old initial 2024 resistance around $2.80 ahead of the move to $4.50, and obviously retesting the October peak towards $4.80. Another winner in the near term, which hopefully will be a winner in the longer term, is Prairie Operating. Here we've got a rising trend channel from back in August. Good support there above the rising 50-day line, currently at $10.80. And looking for the shares to break higher towards the top of that channel, as high as $21 maybe by the end of next month, especially while we remain above the old March resistance at $12.60. Another situation to keep an eye on at the moment is PERT Technologies. Here you can see that we've got a rising trend channel base. Looks like the shares are heading back up towards the top of that gap there from the beginning of November, around $2.60. Ultimately looking for up to $3.30 by the end of next month, while we remain above the recent neckline resistance around $1.60. But clearly the best thing here is that the shares remain above the $2 level. Another stock on the map at the moment is Ribbon Computing. Here we've got a bear trap gap reversal from below the March support there, $2.80, let's call it. Also recovered the 50-day line. That should, that handbrake turn in terms of the price action should lead the shares up to as high as $4 by the end of next month. And ideally, we have no end-of-day close back below the 50-day line, currently $2.97. On to the last three, and the first one here is Skillsoft. We've got a gap down there to the new lows, but bouncing back quite well. So it's a bear trap, looking for a gap close buy signal there. The old support there around $7.70. The longer we stay above that, the greater the chance of a move up to $11.60 at the top of that falling trend channel from back in October. But the key here, staying above that old March support. On to Tesla, which has had something of a miracle recovery over the last day or two. I suppose the sentiment was about as negative as you could get going into the beginning of this week. What's interesting now is that we've had a bear trap island reversal, so gapping down earlier this month, and then gapping down twice earlier this month, and then gapping up again. The only slight negative at the moment is that we have just basically hit the top of that falling trend channel, red trend channel there from December at $167, and really we want to see an end-of-day close. Well, I'll call it 168 to be more precise. Above 168 would be the trigger for a proper recovery on an end-of-day close basis to take us back up to $184, the old March resistance. But if you believe in the bear trap island reversal, you would actually assume that we're already going to recover back up to the mid-180s on this situation. What would be negative here? I suppose a gap down, obviously, but breaking the 150 area, which was that old support line projection from the summer of last year. So the key here really staying on the right side of 150 and breaking 168 as quickly as possible. Finishing off with Willa Lima, and here you can see that the shares have gapped up, or they built up on their island reversal they had for this week and last week. Looking for the shares to hit the top of that rising trend channel from the beginning of 2022 as high as $8.50, and hoping for that to happen by the end of next month, while we remain on the right side of $5.70, which was basically the resistance area from the summer of 2022. That's it for me today. More updates tomorrow.